You're in a grocery store in 2027. The shelves are full. The lights are on. The doors are open. But when you reach the register, your card declines. Not because you're broke. Because the payment network is down. Again, you try another card. Declined. You check your phone. No signal. The cashier looks at you the way people do when normal stops working and no one knows what to do next. You leave without food. Outside, gas stations have lines wrapping around blocks. Not because there's no gas. Because no one trusts tomorrow's price. You drive home past help-wanted signs offering wages that sound high until you remember what bread costs now. Everything still looks like civilization. But the machinery underneath has already stopped. They told you economies grew, contracted, and recovered. Recessions came and went. Inflation cooled. Markets corrected. That was the cycle. Natural. Manageable. Fixable with the right policy at the right time. But what they didn't tell you was that some cycles don't correct. Some systems don't recover. Some debts don't get repaid. They get erased. And the historical method for erasing impossible debt has never been spreadsheets or summits. It's war. The kind that redraws maps, cancels obligations, and resets the board by destroying the players who were owed. You were told wars started with invasions, assassinations, border disputes. But that's the symptom. The disease is financial. And in January 2026, every indicator that preceded the last two world wars is present again. Not as metaphor, as math. Before you like and subscribe, understand this. The system you've trusted your entire life was never designed to last. It was designed to grow. And when growth stops, the system doesn't adapt. It devours. The expectation was simple. Governments borrow during crisis, repay during growth. Central banks smooth cycles. Trade makes war obsolete. Prosperity creates stability. The wealthier nations became, the less incentive they had to fight. This was the logic of the post-1945 order. The myth of permanent peace through economic interdependence. But quietly, over decades, the logic inverted. Borrowing became permanent. Growth became debt-funded. Trade became a weapon. And the wealthiest nations became the most fragile because their wealth was no longer real. It was a claim on future production that would never happen. A promise written in currencies backed by nothing but the belief that tomorrow would resemble today. That belief is breaking now. Not because of ideology. Because of arithmetic. Here's the system everyone trusted without understanding it. The global economy after World War II ran on one invisible engine. The United States dollar as reserve currency. If you wanted oil, you needed dollars. If you wanted to trade internationally, you cleared through dollars. If you wanted to save wealth, you held dollars. This gave the United States an extraordinary privilege. It could print money to pay for imports, fund wars, and service debt. Because the world needed that money to function. It was the ultimate closed loop. America printed. The world accepted. And as long as that acceptance held, America never had to balance its books. But privilege creates dependency. And dependency creates vulnerability. For decades, this worked. The United States provided security, stability, and liquidity. Other nations held treasury bonds as safe assets. It felt permanent because it had been true for so long. But the system rested on one fragile assumption, that the United States would never weaponize the dollar, that it would remain neutral, a tool, not a weapon. The moment that assumption broke, the entire architecture became a trap. The decision that sealed it happened quietly in February 2022. The United States froze $300 billion of Russia's central bank reserves. Not through law, not through courts, through executive order. Overnight, money that Russia had saved for decades, held in Western banks, simply stopped existing in any usable form. The justification was geopolitical. The consequence was structural. Every finance minister, every central banker in China, India, Saudi Arabia, Brazil, and beyond saw the same thing. Your savings are only safe until Washington decides they're not. This wasn't theft. It was something worse. It was proof that the neutral system was never neutral. It was American. And in a crisis, America would use it as leverage. The message was clear. If you hold dollars, you hold a leash. And the person holding the other end can pull whenever they want. The response was predictable. Diversify. Immediately, central banks began dumping the United States treasuries. Not slowly, not cautiously, in full retreat. China sold $15 billion in December 2025 alone. Japan, historically the most loyal holder, sold $8 billion in 3 weeks. Saudi Arabia, the anchor of the petrodollar system for 50 years, began accepting yuan for oil. The system that took 80 years to build started collapsing in 80 weeks. Like and subscribe before the next part, because what happens when the world's reserve currency loses reserve status isn't theoretical. It's documented. And it's never peaceful. The long fuse had been burning for decades, but no one treated it as dangerous because the explosion was always years away. In the 1980s, the United States shifted from creditor to debtor nation. It didn't matter. Growth covered it. In the 2000s, debt doubled. It didn't matter. Interest rates were low. In 2008, the financial system nearly collapsed. Governments responded by borrowing trillions. It didn't matter. Central banks bought the bonds. In 2020, during COVID, another $10 trillion was created. It didn't matter. Inflation stayed low because the world still needed dollars. But each time, the system became more fragile, more dependent on the next injection, more sensitive to the next shock. Debt that should have been cleared during recessions was rolled forward. Zombie companies that should have failed were kept alive. Asset bubbles that should have popped were reflated. The economy stopped functioning as a market and started functioning as a life support system. And everyone involved, central bankers, politicians, investors, knew this. But the incentive was always to delay, to extend, to survive one more quarter, one more election, one more earnings call. No one wanted to be the person who turned off the machine. By 2025, the U.S. federal debt reached $38 trillion. But the real number, including unfunded liabilities, Social Security, Medicare, pensions, exceeded $200 trillion. Japan's debt hit 270% of GDP. China's property sector, which held the savings of 1 billion people, collapsed. Europe's energy dependence left it hostage to external suppliers. And everywhere, the same pattern emerged. Governments too indebted to cut spending, populations too angry to accept austerity, and central banks out of tools. The warning signs were reinterpreted as the new normal. Inflation? Transitory. Bank failures? Isolated. Yield curve inversions? Noise. Gold hitting $4,600? Safe haven demand. But these weren't anomalies. They were the system announcing its own death. Loudly. Repeatedly. And being ignored because acknowledging it meant admitting there was no solution. Then, in January 2026, the maturity wall hit. Trillions in corporate and government debt issued at near-zero rates in 2020 and 2021 came due. It had to be refinanced, not at 0%, but at 5% or higher. Interest payments tripled overnight. Companies that survived on cheap debt couldn't survive expensive debt. Defaults began. Regional banks holding those loans began failing. The Fed faced the same impossible choice it had faced before. Let the system collapse or print trillions to bail it out. History said they would print. But this time, the world wasn't waiting to catch the dollars. Here's the modern mirror. Right now, the United States and China are reproducing the exact financial strangulation cycle that preceded 1914. An established power using financial dominance to contain a rising power. The rising power building parallel systems to escape that containment. Sanctions replacing embargoes. BRICS replacing the gold standard. Tech bans replacing naval blockades. And both sides calculating whether war is cheaper than waiting. China's economy is collapsing internally. Property wealth gone. Population shrinking. Youth unemployment above 20%. The Communist Party's legitimacy rests entirely on growth, and growth has stopped. Externally, China is being locked out of advanced semiconductors, financial systems, and trade networks. Every peaceful path to prosperity is being systematically closed. The United States, meanwhile, is drowning in debt it can't repay, defending a currency the world no longer wants, and facing a population that will demand blood when the economy collapses. For both nations, the political cost of admitting systemic failure is higher than the political cost of war. War justifies money printing. War unifies populations. War lets you freeze debts owed to enemies. War erases the ledger. This isn't about good or evil. It's about leaders in trapped systems choosing the option that lets them survive politically. And historically, that option is always the same. What systems do we trust without understanding? What do we assume is permanent because it's been stable for our entire lives? Money, law, property, trade, the internet, the grid. These feel like constants. But they're not natural. They're constructed, maintained by incentives, by trust, by energy, by force. And when the incentives break, when trust dies, when energy becomes scarce, when force is the only option left, those systems don't bend. They shatter. You're watching the end of an 80-year cycle, not the beginning of a recession. The end of the order that made recession survivable. What comes next won't be managed by rate cuts or stimulus. It will be managed by borders, bullets, and which block you're trapped inside when the currency you're holding becomes worthless. The survivors of system collapse aren't the ones with the most wealth. They're the ones who understood earliest that wealth is only valuable inside a functioning system. Outside that system, wealth is a claim on a promise no one can keep. The people who survive are the ones who hold things that matter when the system stops. Food production, energy access, essential skills, trusted networks, and the ability to defend what they have. You don't survive by predicting the future. You survive by reducing dependence on systems you don't control. Comment below. What system do you trust that you've never questioned? And subscribe, because the next 90 days will determine whether this remains theory or becomes your daily reality. Understanding what's breaking doesn't make you paranoid. It makes you one of the few who won't be surprised when the bill comes due. The 2026 financial crisis didn't start with a crash. It started with a choice made in 2022 to weaponize trust. And now, the trust is gone. What's left is math. And the math says the same thing it said in 1914 and 1939. When empires can't pay their debts, they don't default. They fight. You're not watching the previews anymore. You're in the opening act. And the script was written a century ago.